day, all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Wednesday, and we're now at the 9th of October, 2019, just after 4:15 in the afternoon. That's p.m. Central Daylight Time. In the grain market, we're all getting ready now for the USDA report, the supply demand. It's going to give us some final acreage numbers, some new updates on yield. And, you know, I never believe in this report you get your final acreage. I think November's a better report for that. But as you can see, you got a mixed bag with the beans up a little bit, the wheat unchanged, and the corn down a penny and a half. In the energy markets, a very mixed bag. We already see that 7 people have died in Syria as the Turks are moving over the line. They're doing what they said they would do. We'll see what the president says about that. I just saw a news conference. And in terms of agriculture, just so you'll know, he said he's still looking at a deal that there's got to be the right deal for the U.S. And no, he doesn't believe that on this deal, the U.S. and China are 50-50. He said they've taken advantage of the U.S. for so long that this deal's got to be more balanced. More balanced cannot be you're just going to do 10 million extra tons of soybeans and make a trade deal. If that's it, I am lost as to what this whole fight has been about and why we've been going through this the whole time. You still haven't addressed those other key issues, and that, my point is not politics. I want to make that clear. My point is, as a grain trader, I'm looking and saying to myself, will that do the job? Now, we had an office meeting today about soybeans. We were saying, let's assume that they do that deal. It's about 337 million metric. It's about 337 million bushels of soybeans. That's what it was. And as we looked at that, we were all going, okay, that's a big part of the carryover. The problem is what China takes on one side, you're not going to get European or other business on the other. Maybe net it's 100 million bushels is what the office was saying. Okay, so in looking at the market, you can see how the chart has been coming up, and we've certainly into and cleared this resistance area, but we haven't gone anywhere. Your next up leg is really back here for resistance, and I can argue, let me step back over here, that the 960 level, if you come across the chart, 940, 960, this break that you had here might be an area the market has some resistance at. In terms of the support, it's back at the 18-week moving average, and that comes in now at 882 3/4. When we go to a daily bar chart, and what I'm doing now is shifting the chart up, so you're not getting these low prices back here. Well, as you can see, the market's cleared a lot of areas. If I turn to the side here, we're back into this resistance zone. There's a difference on the weekly and daily charts. So we're back into a key resistance area going into this report and going into the Chinese trade deal. You got 2 elements here that's going to make it hard to grab control of this market. The swing line has still got a pattern of higher lows, higher highs, bullish. The market is over the 18-day average of closes. It is finding support at the 200-day moving average on breaks. So where's the resistance? Well, when I put on the Bollinger Band, you hit it today. That number came in at 928 3/4. You got as high as 931 1/2, and by day's end, you had backed off to 923 3/4. So I do think the pros took money off the table again as the market hit the Bollinger Band. It hit it back here, backed off, and again, it has done that. What about momentum? As I told you, we have an embedded reading. Until the red number closes back under 80 on pullbacks, maybe tomorrow too, I expect to see the buy support. Now, why do I say maybe tomorrow too instead of normally me saying with an embedded reading, I look for the pros to be there? That's because 2 elements can happen. Certainly, we're going to know at 11 in the morning what the government report is saying on supply, yields, acreage, and so on. And when that gets digested, that's step 1. Step 2 is obviously the U.S.-Chinese trade talks. We know what the Chinese want to do. Is that enough for our president? That's really the key. So that's going to tell us how this market reacts. You've gotten up to the first challenge of the 100-day average, and I'm going to pull back to yesterday because I know we talked about this. The upper Bollinger Band, the 100-day average, that was what I was looking for the first resistance in the meal market. You can see the market got up there, got to 309.70 on the close. So it's under the Bollinger Band, but over the 100-day average. Got it? So not a bad action as I'm seeing the market. Soybean oil flip-flopped. We had talked that in bull markets, when they're real and they're going to hold up, normally, it doesn't mean it's all the time, but normally meal leads the soy complex. And you've had that if you look at the meal, another gain today of 280, but look at the soybean oil. It's been backing off. So the soy oil is the one you've got to keep an eye on. If beans start breaking tomorrow, it wouldn't surprise me if soy oil gets a bid. If beans get something real bullish out of all this, watch out. This market could follow, but it'll be the laggard is my guess. In the corn market, back up to new highs for this move. Now that's important too. And the market is now trying to re-embed. So we're going to get an idea as to what's going on from three elements for this. You know, I should have also brought in the weather element into all of this because we are seeing that the first really hard freeze is going to hit the Dakotas. Big snow they're talking there, by the way, South and North Dakota, Minnesota, and then coming down into parts of northern Iowa and so on for the freeze factors. This could be, I'm not a weatherman because we've seen so much fail on these hurricanes and so on, but this could be the official end, and it's not out of sync right where we're at this point in October, of the growing season in many of the corn and soybean areas. The question will be, of course, how much snow you get in the Dakotas and Minnesota. How do you get to the crops if they get a tremendous amount of snow on them? We'll see what happens. And when I say tremendous, I read a report for a record amount of snow at this time of the year in the Dakotas, so we'll find out what goes on there. When we look at the wheat market, you've got higher lows, higher highs. You came right into the resistance zone today, and you did it yesterday. You went to the yesterday the upper Bollinger Band. Today you said hello, 100-day average of closes, and the market ran out of momentum there. Again, flip a coin. Everything tomorrow is going to be those three elements that I told you as to what the market does. Sugar's not impacted with that. Sugar is now 3 days in a row fighting at the 18-day average of closes. It peaked out at the combination of the upper Bollinger Band and 100-day average. It has not been in a downtrend. With today's close, it entered that. Why did it enter it? Well, because you closed under the 18-day average. So the bias is down, the swing line is down, momentum is down. Until this market takes out 1259, it's only 18 points away, but until it takes it out, you're still pointing to the downside. Take that out, and then the question is, did you first take out at 1231, or did you just turn from there and go back up? Believe it or not, if you went back up here without taking out 1231, you could turn the trend back and say you got higher lows, higher highs. Going to be an interesting day tomorrow. In the coffee market, you're still accelerating to the downside. So people that thought a low was in place here, well, you're back into this area on the chart. You had bounced, as you know, from here all the way up, and this is the first sizable correction back into there. Now, the cocoa market, I read an interesting article that you have to understand what's going on. There's a cocoa fund that we had talked about back in July, and the farmers have now gotten together, I believe it's in Africa, and what they're saying is, okay, we're going to price cocoa in a certain way. Money, a certain amount has to go to the farm community. A certain amount of prices go higher, go into a fund for them. But the hedgers don't know how to price that in because unless they're willing to pay this price, which initially drags up other prices with it, just the way that it's going to go. If you don't get your cocoa from a key area, you see it coming here. Now, in New York, where the ICE has, and that's the Intercontinental Exchange has some warehouses for cocoa, they are pulling forward and drawing out a lot of cocoa ahead of time because people don't want to deal with this yet. They're going to have to because as those supplies drop, now you come here. Now, if cocoa prices were to stay up, and this, I guess, is part of what this rally was in reading that article, well, then you're going to get more cocoa production. Remember, high prices begets what? You're going to get those prices. Low prices, you get rid of supply. So we'll see what happens here, but at least I have a better understanding of what some think is going on. In the cotton market, going into the report, you neutralized this market. You now have a higher high with a lower low in sideways action going into the USDA report. So we're going to find out what people think. We're going to find out where harvest starts coming in. There's a lot of numbers that we're going to be seeing over the next 2-3 weeks, and especially in cotton crops. In the cattle market, you're continuing with the uptrend. As I said, I expect as long as you have an embedded reading that on the pullbacks, the market stays bullish and finds buying support. Now, what it did is it took out the past couple of days' low. At least it took out yesterday's low, as we see. Yesterday's low in the market was 111.22.5. The day before, 110.90. Today's low turned out to be 110.45, and then the market went up. What's the number you don't want to see taken out tomorrow? I don't want to see today's lows taken out. It probably means you get more of a break into support, maybe at the 100-day average of closes would be a target. The embedded reading still rules the day, though. So until that's gone, even though if you take that out, I'd get very worried as a chartist, that momentum indicator is the number one part of the hierarchy. In the feeder cattle, you got up today to 145.57.5. So the Bollinger Top's 145.60. I think it's close enough. I wouldn't be surprised if pros took some money off the table there. Now, I know our firm, and I'm talking Linn Associates, they're quite bullish on these markets. They think cattle's an important road where these feeder cattle, especially some further out, are still having good value. In the hog market, no surprise here to see the market go further up. Now, yesterday, if you look at the market, you're up 300 points. The day before, you had been down 300, up 315. So today was important. What we talked about is first resistance, the 18-day average, which the market was respecting. Next resistance point, the 100-day average. And you can see you're making a run for that. Now, if you can continue, and again, I don't know what's going to come out of China and the U.S. We know they need pork. By the way, Smithfield, which is the largest pork producer in the world, I don't know if you're aware of that, they're saying that 2020 is going to be one of these years where bacon, everything, going to be in short supply. U.S., they're going to do their best to keep us well supplied, but China's going to be taking a lot of the product. China owns, WH Group out of Hong Kong owns Smithfield. So if you buy their products, just understand it. Nothing wrong with that, a great company. Resistance here, next resistance, 72.57. So that's where I'm going to leave you today. No offerings or anything else. Let's just leave it at that, and I'll see you all tomorrow.